do it for you for free, because I'm sure you won't have any tax to pay anyway, but you have to do a tax return, and I'll just do it as a favour. She said, oh, so happy, thank you so much. Would you like a skateboard? No, not really. Don't worry about it, absolutely fine. So,
is that part of your profit if you do it?
I have to declare the skateboard that I don't need. So basically, if you find it hard, then it's an illegitimate business expense. You can pay an accountant to do your self-assessment. And we just find it so easy, because it's what we do for a living. And I appreciate that, if I had to teach English as a foreign language, I wouldn't have a clue where to start. So I would be in awe that you can do it so easy, and I would find it really, really difficult. But we know what to do, we know all the boxes. There's 32 pages of a standard tax return. To do a blank tax return, you have to have maybe 5 or 6 years' knowledge. So I can understand it is daunting if you've never done one before. You just have to find the bits that are relevant to you. I think part of the thing is to have all your information together in the first place, have it all nice and tidy. Don't start a tax return and then think, oh no, I've got a job. Where's that P6? And get all the stuff together, keep it in a nice little plastic folder, call it tax, one of those a year, nice and straightforward. I'll show you how to do those sort of things in a minute. And then basically you've got all the information there. You've got your P6s, you've got your certificates of interest from banks and building societies, any expenses that you've incurred, and try to work it out before you approach the self-assessment. Because if you don't have any of that information and you click on that box, it's like, what do I do with all this stuff? You have to summarise all the stuff first into like a profit and loss account, do a summary of all the things that they're going to ask you questions, and then it's quite straightforward. You can go back to it, you can save it, go back to it again. It isn't difficult, but if you hate it, it's okay to hate it, because that's what we do. We've got 1,500 clients because they hate it as well. But if your income is less than £10,000 from all sources, I wouldn't waste too much time sort of asking yourself, what should I do with this and what should I do with that, and should I pay DVDs or Sky? It just doesn't matter, because if it's less than £10,000, you've got no tax to pay anyway. So I would just sort of tick the box. Say your income is, if your income was 12,000, and then just click the 3-liner that you want to claim £2,000 worth of expenses, because you know you've spent more than that, then you're not going to pay tax anyway. So you wouldn't want to be losing any sleep over which boxes you fill out. You can just do a 3-liner on self-assessment.
That's all your income.
Sorry?
That's all your pensions and everything.
Yeah, but then there's just if you think of it, the tax return is in sections. If they made it pretty and they made it little, pink is pensions and green is self-assessment, and they had little, you could just click into those sort of boxes. But they just don't make it that easy, because you have to keep clicking into things and into other things. But your pension income, you know if it's a state pension, you know how much you get. And then you just put that in gross. There's no tax deducted, but it is taxable. If you've got rental income, got investment income, just collect all that information for the year ended 5th of April every year, and it is quite straightforward to do. If you don't like it, it's not a problem. We can do tax returns for people, we can do accounts for people, we can offer people different deals if they want to do their own accounts and they want us just to do the self-assessment. If they want us to do all their accounts and self-assessment, we can offer to do that for them as well. And we give special deals. So basically, just remember, there's some really important things down here. Anybody ever had a student loan? Have you remembered to tick your box on this self-assessment?
I paid it back when you're 15.
Huh? You're still paying it back?
I haven't started because I've never earned enough money.
But don't forget to tick the box on your self-assessment return, because they're terrible about that. They kind of make it so small that you have to find the box to tick. And also, anybody got a husband or wife who's a higher rate taxpayer, and children. So, because sometimes with higher rate taxpayers, one of them is getting child benefit. And if you're doing self-assessment, you kind of forget about your partner earning £100,000 a year or something, and you don't even tick the right box, and therefore they're getting child benefit, and they're not supposed to get child benefit because it is actually taxable, and you should stop claiming it when one of you is a high rate taxpayer. So it's just 2 boxes that people often forget, the poor and the rich. It's worth remembering those 2. The other thing that's really important is just check, like yours was a good example, if you stop working somewhere in a year, chances are you pay too much tax. So many people come to us and say that the revenue have this new initiative on rent a room, so people that have not declared rent a room, I'm not going to ask anybody here if they haven't declared rental income, because that would be really mean. But if you had rental income or buy-to-let rental accounts, so many people sort of kind of felt that they would never get caught. Oh, yes, they did. So the Revenue have sent millions of letters out to people with self-assessment, who should have had self-assessment returns, saying we understand that you've had rental property, and we've had about 5 in the last week. Like, oh my God, I've got like 20 years. What do I do? And there's a declaration, but they're quite good. The Revenue are quite nice. You could do a declaration, and then you just have to put all that income on your tax return. So your tax return, if you've got a tax return, you have to make sure it's honest and complete. So if you know you've got rental income, you can't sort of say, well, I wouldn't bother to declare rental income. Because when you sign that tax return, when you submit it, you're telling the Revenue, that's all my income for that time. So if you know you've got another source of income, unemployment benefits taxable, pensions are taxable, rental income's taxable, a lot of them aren't taxed at source, but they are still taxable. So as long as you fill out the right boxes with the right information, push a button, it's absolutely fine. So, is that it? No. So self-assessment, annual accounts, yeah. So basically, why would you need to do a set of accounts first? We think you do because, A, if you're not making a profit, then you don't really want to be doing the job. So if you are making a loss, you wouldn't really want to continue to make a loss for years. It's a way of looking at the business, because it is a business, and you want it to be profitable. So rather than give them venison, you might have to give them pork chops a couple of nights a week. Rather than having expensive things, the aim is to make money from it. So you don't want to be wasting money unnecessarily. So doing a set of accounts helps you see what profit there is. And also it helps like you where you're suddenly faced at the year end with all these receipts. It just means that you've already worked out what the profit is from this type of business, which makes it easier to put on the tax return. Sole traders declare their income expenditure on an annual self-assessment. You don't need to send the accounts into the Revenue, but you just need to work out what your profit was before you begin, really, so you'll have a good idea. So I always reckon it's a good idea to prepare manual accounts, like I showed you at one of those earlier slides with the income and the categories of expenses, to see if you are making a profit. Because if you've only made £2,000 and you know your pension's only £6,000, whatever you've got on tax, it's not going to make too much difference because there's no tax to pay. So it just helps you see in advance if you're likely to have to pay tax, rather than be terrified of the return that you kind of immobilise. So you need to put on the return different sections: self-employment, investment income, pensions, employment, foreign income, capital gains. Partnerships, different. If no one's got a partnership, just worth mentioning, if you do start a partnership with a partner, you will have to do 3 tax returns, one for the partnership and one for each of the partners. So is an added, if you don't like one tax return, don't become a partnership, you want to do 3. Yep. Limited companies have to do annual returns, corporation tax returns, and they have to do directors' self-assessment returns. So, yeah. Deadline, all has to be filed by the 31st of January each year, otherwise you are fined £100, and they are very good at fining people. There aren't really any excuses why you shouldn't do it on time. I would say do it June, July every year, unless you owe them money. You would work it out, but don't push the send button, because if you push the send button and you owe them money, they'll want it sooner, if it's a balancing payment for the previous year. So sometimes it's better to wait, or if you've postponed payments on account. Has anyone ever postponed payments on account? Because if they tax you, it's a really strange way, they tax you January and July every year, and they ask you for a payment on account for the next year, if your tax is more than a certain amount of money. Now, if you don't know how you're going to do the next year, you can postpone that tax. And then if it is due, if you send your tax return in too soon, they'll ask for the money before January. So it's just a little tip. Do the work, know how much you've got to pay, but don't necessarily push the button until towards the end of January. Yeah. And that's it, that's how that one.
If you do your tax return before the 31st of October, can't you have the... So, because I've got a pension...
Yes, it's a private pension, is it?
It's a teacher's pension.
Yes, if you do it before, it's supposed to be September, but they will still do it up to about November. So sometime, if you want it, your code adjusted, so that you don't end up paying tax to the Revenue every January, then you have to get your tax return in earlier to give the Revenue time to do it. They say October, sometimes they say September. It is actually supposed to be September, but we can still get it changed in November, and sometimes we can get it changed in December. sometimes we've got it changed in January. So they say, yeah, it's much better just to have your tax code reduced on your private pension or your PAYE job, and they collect the tax from you in that way. So that's quite good. This is just the income tax, personal allowance. This is, oh, again, you can't see the years. Sorry about that. I'll remember that next time. This is 2013. This is 2014-15. This one. This is a personal allowance. This is £10,000 tax-free from all sources. Income limit. So if you earn more than £100,000, anybody here? Well, you will lose your personal allowance. So it's something. It's important when we're giving dividends to people who run limited companies. We'll say, look, don't have a dividend of 100, just make it under that so you keep the personal allowance. If anyone, I'm not going to ask, anyone over 65 to 74, you get 10,500, so you get an extra 500 for being older. Personal allowance, if you're over 75, which clearly nobody in this room is, you get 10,660. Got another 160 for being older, but that's to look forward to. Married couples, but you have to be over 75, because they used to give you a married couples allowance, but they've changed that. So now only older people can have the married couples allowance of 8,100. Income limit for age-related allowances. So if your total income and you're older is 27,000 or more, then you start to lose these age allowances. But it won't apply to anybody here. Is there an age limit on the tutors? No? No? So it may affect anybody in the future, but for now it does not. Minimum amount of married couples allowance, well that's it, but you're not getting married couples allowance anymore. If you're blind, but then you couldn't really be a tutor, could you? If you're blind, could you be a tutor? Well, if nobody's here to find out, but if you were, you could have 2,230 additional allowance for blindness. So those are the allowances. The tax rates, basically, on the first, you get a savings rate. So taxed at source on savings is a different rate. Basic rate tax goes from 0 to 31,865. You will only pay 20%. But on top of that, don't forget you've got your 10,000 tax free. So in other words, you could earn £41,000 and you would still only pay 20% tax. Yeah. If you earn over 31,866 plus a 10,000 personal allowance, you will have to start paying 40%. That goes up to 150,000. We don't mostly earn over 150,000, so we don't have to worry about paying more than 40%. But those that do this year have paid, well, 50% is the rate they want. They've had 45% on everything above that figure. And the rental room relief limit has been the same for many years, 40/50. That's for people that truly are renting their rooms, like I've explained before. So those are the rates of tax. VAT, I'm not going to talk too much about VAT, just that if you turn over more than 81,000 on taxable supplies, then you would have to VAT register. I don't think that's going to apply to anybody here, but if anybody started another business or internet trading with something and doing fantastically well, you might end up having to be VAT registered. Just bear that 81,000 in mind. If you do something, it does mean that everything you do is potentially taxable, but since education is exempt, you then become partially exempt. So then you would definitely need advice about being a limited company for one and a sole trader for another. So it's not really relevant, but I thought I would mention it. So subsidising your income. So if people aren't earning a lot of income, just remember things like tax credits. I don't know, I'm going to ask people if they are on tax credits, but if your income is low and you're over 26 and you are getting pensions and you're getting investment income, you're getting tutoring, it still might be fairly low, depending on your age. You can just go onto the tax credit helpline. There's a calculator. You can type in your circumstances. You can say my income is whatever it is, and it will tell you if you qualify for tax credits. And it will depend on certain things like your age. So it's worth remembering that, because if you haven't got a massive pension when you retire, a lot of people on just state pensions will qualify for pension credits. So it's worth just bearing that in mind and checking the other one. You could work part-time in addition to tutoring. You could get rent a room in addition to your tutoring from renting out a home probably. And you could look at maximising the benefits of your business by being a translator or something, or doing other things. Yeah, that would get you extra income. National insurance. So most people here, who hasn't worked for 33 years?